Hi everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. In my last video I said there were green shoots and gold has gone up a bit, 1%. Let's see what the data shows today. This is a leading indicator chart. So based on leading indicators we can forecast the gold price. And as you can see, the latest data is very bad. So I thought that we had a green shoot here, but now we went even lower. So the trend has worsened. So I would not be buying gold right now. Taylor roll rate is still going down, still elevated. That's good. Inflation is coming down now. So misery index is declining, which is not good for gold. The GLD is not going up that much. So I think this is a temporary bounce and it's very likely that this gap will close. So it's not looking good. LBMA holdings going down is typically correlated with a lower gold price. Demand for gold is still okay, but it's trending down. And for silver, it's also going down. So India is not importing silver anymore. SLV, well, here you can see the ounces in the SLV trust. It's not going up. It's actually going down. And I think this rise in silver price is just a dead cat bounce. So I would be very cautious about getting into gold. Let's take a look at the US pin sales. Also down. So not a lot of interest in the coins. Premiums have gone down, so as premiums go down, then the price goes up. But now, there could be some more upside when premiums keep declining. But look at the junk silver premiums. They have collapsed to 25%. That's very low. It's not at the bottom yet, but it's not as cheap as it was. So the silver price has gone up. It's not that cheap anymore because the premiums are down. So there could be some downside risk. Same with Shanghai gold premiums. They are at zero right now again. The best place to buy gold is when the premiums are up. You can see here you should buy, here you should buy, here you should buy, here you should sell because the premiums are negative and gold went down. Now they are at zero, so yeah, it's not a great buying point right now. Same with silver. This was a zone where you should buy silver, went up. Now premiums are at zero, not a great buy for silver. Upmex gold premiums also down. So that's this point here. Typically these are tops. This should also be a top. PSLV premium is not doing well either. Managed money COT report also telling us that we are topping out, so this should be a top. With gold, it's less pronounced, so maybe here there's some upside. But for silver, I would be cautious. Its COT report is not that positive. Same with gold forward rate, still in the positive, that's not good. You want negative go forward. inflation coming down, real yields, I think they are now even positive. The amount of negative yielding bonds is now going positive. That's not good for gold. The only thing that's positive is seasonality. We are in January, there could be a bounce, and then it will fade off. Same with gold, a bounce in January and then fade off in February into March. So not looking good. Also this here, the bullish percentage index shows that we are topping out, right? So this is not a point where you should be buying. Money supply is dropping, also not good for gold and stocks and commodities in general. So yeah, the Fed is tightening. Money supply is going down. Central bank balance sheet is also going down. The red is the US. ECB blue is also going down, and Japan is going down. So that's all very bad for precious metals. And the deficit is shrinking, which is also very bad for gold. And this is the goods deficit is shrinking. And also the services is going in surplus. So that's not good for gold. And here, as I feared, this trade data told us that the deficits were going to shrink, and that's exactly what happened. Trade balance is now shrinking. So the trend is going to continue. We are seeing deficit shrink, and it shrinks because the imports are declining faster than the exports. So yeah, so the US is importing less. Prices are down also, so that's deflationary. Same here, prices go down, deflationary, but it seems that it's leveling off a bit. So it's not that bad anymore, but still deflationary. And these are Q3 numbers down. Less imports, deficits shrinking. So that's bad for gold. Let's look at the inflation. All the trends are trending down. 10-year break-even rate is still at 2.25, but trending down. So it's pretty flat. Not as deflationary yet, but look out for this chart. If we get things like this going down to zero, then something bad is going to happen. It's still elevated, but the trend is down. So watch this chart. Capacity utilization is trending down. So it's now at 79. That's not good for gold. So inflation is definitely trending down. We also had FOMC meetings. So the old dot plot went to 4.5%. Now they are going to raise it to 5%. So the Fed wants to kill inflation, and they are actually succeeding. That's not good for gold. So yeah, this is a chart that tells us that as inflation goes up, stocks will fall to a lower PE ratio. But now that inflation is coming down, then probably stocks will go back to a higher PE ratio. So that's what the Fed wants to do. I think they are succeeding. The market is pretty stable and inflation is coming down. Now, what about energy? Currently, there is still some oversupply in oil, but I see that supply is getting constrained, especially from Russia. So exports should be going down going forward. We know that energy demand will always have an uptrend. So historically, we will see higher demand. China oil demand is also going up. The latest natural gas demand for November was also up. So I don't see declining demand for energy, except for natural gas where the weather is very warm, but that's temporary, I think. And on the supply side, we see that the SPR drain has diminished the price of oil a bit. So each time they do this, prices go down, but this is going to end at some point very soon. So when that happens, oil can rise again. So I'm still bullish on oil. Demand is expected to fall a bit in the first half of this year, but will go up in the second half. So wait for this to happen. Still think that this will play out. So to conclude, let's look at the forecasts for this year. Where should we put our money? Agriculture is, I think, a very good play, especially sugar and rice. So these are going to go higher. Energy is also the place to be. It might not look like this, but I think the second half will be better. So especially for oil. Natural gas is very volatile with the weather. Coal, I think, is going to go down now because natural gas is lower. But oil should be pretty good as the demand goes up and supply is constrained. Metals apparently avoid tin. Lithium is also not going to do well. The demand is cratering right now. Iron ore probably also not doing well. Copper is doing very well, so I think that copper will be rising. Gold is a safety trade because we have a recession, and lead seems to be doing fine as well. So nice chart to look at. Gold is probably not that good for this month. Wait for a dip. I would wait for a dip and then we will see what the gold forecaster index will tell us. But this is not looking good at the moment. So that was the update and I'll see you in the next video.